Thank you, and good afternoon all. It is a pleasure to be here, so I'd like to start by thanking you, Alexandra, and the team at Better Finance for putting together today's conference and for inviting me to take part in the discussion. Just referring to the wish list we just listened to. Yeah, if I may, before going into the speech itself, there seems to be a disconnect between what is considered between wishes and reality, because being even more ambitious, maybe because I just had 2 days with ministers on Monday and Tuesday, trust me, what we have on the table on MISP is incredibly ambitious. So if we get closer to the objectives of MISP, it will be a massive progress in Europe. And I'd like to tell Oliver also that we are actually trying to do exactly that. I would not say reconcile our retail investors with capital markets, because I think we need to build a relation from scratch. It never really existed. So we need to build it from scratch. We cannot do it like in the US, because we're not the US, and in many ways it's a good thing. Really happy that we are not. But we're also not a federation, so having that level of aggregation is not, I think, feasible anytime soon. That being said, within our framework, there is a lot which can be done, and I will try to talk a bit about it now. So, as you know, I do welcome events like this one, where retail investors are placed at the heart of the debate. Because at the end of the day, the Savings and Investments Union will only succeed if citizens buy into the project, if they can see that investing can deliver better long-term outcomes for their savings. In our Savings and Investments Union communication, we set out 4 pillars, and it's over a year now, so just reminding ourselves: citizens and savings, investment and financing, integration and scale, and efficient supervision. But in reality, citizens are the foundation on which the entire project rests. Without their participation and their trust, none of the other pillars can stand. Because one of the core realizations that inspired the SIU and that sets it apart from earlier initiatives is that Europe does not lack capital, but that it lacks mobilized capital. For a continent with some of the highest savings rates in the world, we still struggle to turn those savings into productive investments. And this is not just a question of low levels of financial literacy, a lack of simple and trusted products, a cultural preference for safety, or limited incentives to invest. It is also linked to the architecture of our markets. Our objective, therefore, needs to be to make the single market work better. By breaking down barriers, increasing competition and choice, and helping to lower costs, we can make it easier for citizens to participate in Europe's capital markets. Today, I'd like to speak about some of the proposals we have put forward through the SIU, notably the MISP, and how they can improve the retail investor journey. Our work under the pillar Citizens and Savings is really about inclusion and participation. Citizens can only get involved if they have the knowledge and skills to do so. That is why we have made financial literacy a priority. And when I say financial literacy, I'm not just talking about teaching citizens how to invest. Financial literacy is much broader than that. It is about knowing how to manage a household budget, plan for the future, avoid excessive debt, scams, and misinformation, because these are essential life skills. Once citizens are armed with the necessary knowledge, they also need attractive, easily accessible, and transparent ways to put their money to work in capital markets. Experience from several member states show that savings and investments accounts are an effective way to achieve this. We don't even need to look at the US. We have examples right here in Europe. Along with our financial literacy strategy, we have therefore put forward a recommendation to Member States to introduce simple and transparent savings and investments accounts with associated tax benefits that will enable citizens to participate in capital markets even where they only have very small amounts to invest. Supplementary pension products are another key lever that enables long-term saving. The Commission has recommended that Member States introduce auto-enrollment in supplementary pension schemes. By changing the default from opt-in to opt-out, auto-enrollment significantly increases participation and helps embed long-term saving behavior early in working lives, while ensuring citizens can stay out if they choose to do so. When well designed, these systems have delivered strong results in several countries. They enable individuals to build pension savings gradually over time and, crucially, to start early, maximizing the benefits of long-term investment and compounding returns. Because, as we all know, investing in capital markets for retail investors is much more a function of time than of anything else. It's how long you leave the money, not so much how much money you put. If it's a diversified portfolio and you leave it there long enough, it's going to work. So on top of our recommendation, which also encourages Member States to set up pension tracking systems to give citizens a full overview of their pension rights, we have proposed a review of the Pan-European Personal Pension Product, the PEP, seeking to turn it into a genuinely European, cost-effective and flexible long-term savings product, making it attractive for EU citizens. As you know, the PEP has been a European product with 27 national compartments, something we often do. However, and as I mentioned earlier, delivering better outcomes for retail investors is not only about targeted consumer-facing measures. It also depends fundamentally on the strength, scale, and efficiency of our capital markets. And this is where the MISP comes in. It is one of the most consequential elements of the Savings and Investments Union because truly integrated and deep capital markets are essential to deliver growth, competitiveness, and better investment opportunities. By addressing fragmentation and removing barriers, the package will help create new financing channels for European companies and eventually offer households a broader range of investment opportunities. This matters because fragmentation does not only affect firms and market infrastructure, it also affects retail investors. When markets remain divided along national lines, investors face fewer options, less competition between providers, and often higher costs. A more integrated market will allow investment products and services to reach citizens more easily across borders. And there is no intention whatsoever under the SIU to push money in any direction. Money should go where people want it to go. It's people's money. The SIU is about private money. So it's for those people who have the money, who have worked very hard to save it, to decide where they want to put it, including under the mattress. I think it's a bad option, but it's people's right to do it if they so wish. So we're not pushing money in any direction. We just want to make sure that once people decide where it should go, that it's easy, cost-effective, productive to do so. Where? It's for every institutional or retail investor to decide. So the measures under the MISP, the measures on asset management are designed to foster scale and competition among UCITS and AIFs, which should translate into more efficient products and lower fees. There is still room to improve and make it easier for asset managers to take advantage of the single market, including by reducing differences in relation to cross-border marketing and distribution. For retail investors, this means more choice, more competition, and better value. It means a wider range of products, more pressure on providers to improve quality and reduce fees, and a market where citizens are not limited by the size or structure of their national market. This is essential if we want investing to become a normal and accessible part of financial life in Europe. Sorry. At the same time, the MISP also promotes innovation, which is key to making markets more efficient and accessible. The proposed adjustments to the distributed ledger technology pilot regime will make it more flexible and extend its duration. The MISP also seeks to integrate the DLT into the Central Securities Depositories regulation, because we want this to be also fit for the technologies of today and tomorrow. DLT is not an end in itself, but used well, it can help remove some of the frictions that make capital markets more costly, complex, and distant from citizens. By simplifying trading and settlement, improving transparency, and allowing new forms of market infrastructure to develop, DLT can support lower costs, more competition, and broader access for investors. Finally, MISP would make ESMA the single supervisor for major cross-border market infrastructures and crypto asset service providers. As retail investors increasingly look beyond their domestic markets, they should be able to expect the same high standards of supervision, market integrity, and transparency wherever they invest in Europe. This reduction of fragmentation will also support another important objective: strengthening Europe's public capital markets, which I think was part of your discussion just before this. Public listings of our companies should be encouraged whenever it makes economic sense. This is because public markets provide transparency, liquidity, and the possibility for broad investor participation. They also come with more robust investor protection guardrails. By promoting more integrated and liquid markets, and creating a solid base of informed retail investors, we create more incentives for companies to choose to list. In this context, the implementation of the Listing Act, which was proposed and negotiated in the last mandate, is very relevant. It reduces administrative burdens and makes it easier and more attractive for companies to list in the EU. Retail investors also got a boost at the end of last year through the political agreement reached on the retail investment strategy. The RIS was designed to update the existing investor protection framework so that retail investors receive clearer information, better value, and more confidence to participate in capital markets. It's about clear, understandable information. And when we look at all of these aspects, the strategy was about creating trust in capital markets. This is what really matters when pursuing greater retail participation. And this is what I want to come back to in concluding my remarks: trust. If we want more retail investors to participate in capital markets, they need to trust the system they are being asked to engage with. They need clear information. They need transparent products. They need fair costs and confidence that markets are properly supervised. This is what connects our work on financial literacy, savings and investments accounts, supplementary pensions, Listing Act, the retail investment strategy, and the market integration and supervision package. Each of these initiatives will make the retail investor journey simpler and more rewarding over the long term. Because Europe does not lack savings, but we need to make it easier for citizens to put those savings to work. And we will only succeed if retail investors are placed at the center of this agenda. This is what the Savings and Investments Union will deliver: capital markets that citizens can understand, trust, and benefit from. But I would like to remind you all that the MISP and the proposals we have been tabled are, for now, just that: proposals. So we really need the co-legislators to share the objectives, to share the ambition, to share the very tight calendar, which I would argue it's not a wish but a command, because it was signed by the leaders of the three institutions. And I do believe that when we get commands from our leaders, we should deliver on what they tell us to do. So yes, I'm hoping that we can have a good, ambitious, and fast agreement on the MISP, because if everyone really supports the SIU, as I keep hearing is the case, then this is it. Thank you.